Welcome to MFX Center's 2-Minute Trading School, where 2 minutes a week can change your trading life. Before progressing further, let's look at the disclaimer. In today's video, we'll be talking about the power of small capital. But before progressing further, let's look at the disclaimer. The following method will significantly change your trading results. Beware, don't be overconfident. So if you are a trader and you are trading, then chances are you are losing 90% of your times, and because 90% people does. And for losing 90% of your time in trading, you're losing a lot of money. But what if I tell you that you can actually make money with a small accounts? What you'll say about that? You might be thinking a small capital equals to small gains, and that might be very disappointing, right? But if I tell you that is one of your biggest advantage in trading, what will you say then? That advantage is called Underdog advantage. I think you have heard about this term because there are so many books out there that are talking about the underdog advantage. But what is the underdog advantage in trading? Let's see today. In trading, one of the biggest traits is confidence. If you aren't confident enough, then you are not going to make a good amount of money from trading. Because if you don't believe that you can make money from trading, you'll not be making some money out of the trading. So that is very important that you believe in yourself and have confidence in your trading strategies and ideas. Do you know, despite having high capital, many traders struggle. There are millions and billions of dollars being lost in any kind of trading you can see over there. That is in Forex or share market, stock market as you can say, then futures, and in the commodities market, people with billions of dollars are losing every day. So that doesn't actually tells you that having big capital will make you a winner. So what is the power of a small capital, and why these big people with big amount of money lose? Because they don't have what you have. You might be thinking, what I have a small capital. Yes, that is, you are risking less and you're gaining more confidence, and that is one of the biggest mindset you can actually get in trading. Because if you can get a greater amount of confidence in your strategy and you understand the market well, in that case you'll be having a great advantage that I called earlier, that underdog advantage in your trading life. So did you ever face it that you can't sleep while you have your trades open, like this gentleman over here? So what was the reason? The reason was you took bigger position than your account can digest. For example, you have a $1,000 account and you opened a one lot trade in Euro USD, and while you are going to sleep, your mind is still working on what the trade is doing, what the market is doing. Are you losing any money or are you gaining any money? So you're always thinking about every pip you're winning or losing, and your brain is still calculating risk and reward while you are asleep. Though you might set a stop loss, but still things will go on in your mind. So you might be asking how a small capital or account can help. This is the biggest question, and I'm going to answer it in this video. A small account equals to more research on a small instrument. If you don't have enough capital, you cannot buy a big share or big lot in your trading account, right? So you'll be investing in a small commission-based instruments, and you'll be taking advantages of a small moves which you won't bother if you had big amount. So you're going into kind of a penny stock kind of thing, and you will be very much engaged in such small instruments rather than looking at the instruments like Apple, Google, where it costs around $1,000 a share. So if you have a small account, you will be risking somehow as low as buying a coffee, and losing that will not matter to you. because you can afford that mistake. Because if you lose $50,000 in a trade, that is a big amount, right? But if you lose only $10 in a trade, you can afford it, right? You can buy a coffee and even a meal with $10, and that you can risk, no problem. But if you are risking $50,000, then you might always be thinking about every pip that goes against you or for you. So you'll not be trading with your proper discipline. So blowing up a small account won't bother you much. That is the summary. So if you have an account of even $100, you'll be making more money if you calculate the percentage gain with the percentage lost in comparison with a bigger account. And one of the biggest advantages is that when you'll make money in a small account, you can double your account in a month. For an example, you have only $100 in your account and you lost around $20. That doesn't bother you much, right? But if you make another $100, that means you have doubled your account. And without risking something big like $50,000, you are actually doubling your account. And the doubling of the account should not matter to you, because you are currently testing and you are currently learning to build up your confidence. As your confidence builds up, you deposit another $100 or another $500. Then you just try to trade. And like this, with the help of compounding, you can actually invest around $10,000 or even $50,000, and you'll have that confidence to control and maintain that $50,000 and make it double as well. So let's calculate. For example, you have $100 again. Your lot size is 0.01, that is 1 cent per pip. And you win 50 trades with $2 profit each. Then you gain $100 profit, right? And you lost 10 trades with $1 each. That means your loss is $10. So 100 minus 10, your net profit is $90. That is nearly doubling your account. So once Warren Buffett said that if you give him $50,000, he can actually make 50% in a year. But if you are smart enough, you can make more than Warren does, because Warren is an investor, and if you are a day trader or swing trader, you'll be making more money than he can, right? So if you lose that $100 capital, it will not bother you like you lose $1,000. So that is the mindset we should have, and that is the mindset we should actually develop. So doubling your money will give you the needed confidence, and after doubling, withdraw your invested capital, whether it's $100, $50, $200, or $500, withdraw that and trade with your profit that you have made, because you have doubled your account. That will also secure a confident feeling in your mind that you have nothing to lose. Everything that you are investing currently is your profit that you have made, and that will give you another bit of confidence. And as you grow consistently with your profit being your capital, you will acquire the required confidence, which can boost your trading mindset. So that is pretty important. But one thing you should actually make sure that don't get overconfident, which will lead you to bad trades and revenge trading. Always be in your trading discipline. Do not increase your lot size but double or triple when you are making consistent profits. So that is one of the biggest mistakes you will be making, because if you increase your lot size with not increasing your money by that amount, you'll lose your money faster than you have gained. So you should be in the discipline, and you should maintain the proper money management for that. And always you need to plan your trades. You need to treat your small capital as a big capital, like even a $1 million. And you should do proper planning and journaling before getting into the trade. We always rush for getting into the trades. Like when you see a capital or bearish candle, we jump on the trade. We should not do that. We should first understand what is the market context, how the market is reacting to the levels, where is the current market situation is, and when I should be entering the trade. So timing your entry is very important, and that planning will help you to get that amount of entries or that kind of entries in your account.